record. So that barrier was, hindering a lot of people when I would try to train them. And then it's hard to trust, when you draw something, or especially if you're drawing stuff on TradingView, you can accidentally move a line after you draw it. And then it also kind of limits you, kind of like if I go to, like, you see how Apple has support and then it has support right here. Or if I go to NVIDIA, it has, a line of support. It has resistance right here. I can see that there are sellers right here. You normally would have to take all weekend and draw all this stuff out. So what I ended up doing was and I used to manually draw it all out myself as well. But what I did is coded this to automatically draw all your support and resistance lines for every time frame and whatever stock you click on. So that way, if a person wants to trade SPY, or if you're inside of a group and you have somebody that's doing a call out, saying you're not blind to exactly where buyers are, where support and resistance are already located at, because you don't have to just keep drawing out or trust other people's drawings. Your chart is doing it for you, so you can already see pretty much where, the support and resistance levels are on the chart. And so that's handled by this Wolf Levels Pro. And so I built this and automated this before we get into the training. I'm just letting you know what the Wolf chart is. I automated these processes so that, people could get past that skill barrier of trying to learn how to draw everything out on their own. And so it allows you to kind of, just focus on the meat and potatoes of trading, which is two things: having a confirmation system to know when is it time for me to get into a play, be able to build a trade plan and an exit strategy in your risk management, and focusing on finding stuff that's ready to break out or, sell off if you want to buy puts. But if you're spending like a lot of your time just drawing out, 2 to 3 charts, it does help you learn when you do it that way. But it also is a barrier that keeps a lot of people from being able to trade for themselves and just depending on like one good trader to give them every single play. And you just got to trust what they say. And then so you're betting like your hard earned money on somebody else's skill set instead of just kind of learning how to read the chart on your own and being able to see for yourself. So the Wolf chart in my effort is to duplicate my skill set into other traders and make them independent. So we kind of trade as a pack, but my overall goal, how I measure my success, is can a trader see what I see or even become better than me as far as from a technical analyst perspective? And can they now, no matter what group they're in, if they go somewhere else and go to a different Discord, they go anywhere, if somebody says, hey, what's the next level on SPY? Can they look at this chart and say, hey, if SPY gets to like 752, that's where bears are sitting at. And then the buyers are sitting down between 745.80 and 739. So we probably will bounce down in this range, right? So I'm not going to be buying puts where I see all this green at and it's a 200 cloud. I'm not going to be buying puts here. If I want to buy puts, I'm going to buy puts for my friends up here. All the bears sitting up here. So I might as well wait for price to come up here, reject, and then come down. And so you want to be able to read a chart. And so that way, if I get people that's becoming able to read charts and become technical analysts, I'm just trying to produce as many technical analysts as I can. And that way, they can become skilled and teach this to, the next generation, their kids, their grandkids or whatever. I'm saying? It's something you can pass down once you get the skill because can't nobody take it away from you. So we're at the time, so we a little bit past. So last meeting, I put it on YouTube. Um, I'm gonna give you all my YouTube. So right now, you go to YouTube, you can just type in Sean the Wolf education and subscribe to that YouTube channel. That has the previous session that I did, and I covered a lot of things in that session that I'm gonna pick up inside of this session, and we'll start talking about some other things that are dealing with entering into a stock. How do I find the stocks when I'm doing call outs inside of the Discord? And then just the basics of trading. So what I like to always start off with, no matter what group I talk to, is if you don't really understand the game and pretty much who controls it, then you really can't really participate in the stock market because there's a game being played, and it does contain manipulation of price at certain areas and things like that. And so you have to kind of zoom out and kind of understand, first of all, who's controlling the game, who is the trendsetter. So we always talk about you if you've been trading anytime or investing, you hear a term like, hey, don't fight against the trend. Like the trend is your friend. You hear, cliche statements like this. But then that should also, if you're a curious person, make you say, okay, well, I don't want to fight the trend, but like who's setting the trend? Like who's who's the trendsetter? And so the trendsetter in the stock market is whoever has the biggest money, whoever got the biggest bag and can put the most money up or is buying at a certain area, they're going to set the trend and set the standard for that stock, right? So if you zoom out and just look at these green zones on this chart, you will see something that's happening. You see how up here at this red zone, let me turn off this supply and demand for a second. You see how at this red zone, like we know that these are sellers. This is sell orders. Okay. So just like if you went and bought puts or if you sold a stock and you put a sell order in, these are sell orders. So we can see where they're going to sell at. And we can also see these green zones on the chart, which shows us everywhere these billionaires or these hedge funds and banks, wherever they bought it, right? So we're tracking where they bought it and where they sold at, right? And that's important because if I'm trying to not fight the trend or if I'm trying to participate, you have to first admit this to yourself. Your money doesn't move anything in the stock market. We don't have enough money. Now, if our group was like, 100,000 strong or like 50,000 and we was organized and we could become like a little mini hedge fund or something, but we're not that, right? And so, and not many retail groups are. So you can pull some of that type stuff off in like crypto, but in stock market, this is trillions of dollars we're talking about, and billions of dollars and hundreds of millions of dollars moving to move these stocks. And so we can see here at this, like just taking this chart, this 2 hour chart, you can see them actually buying and selling or rinsing and repeating these same trades. Like right here, back in June, they sold off SPY and it came all the way down here. They bought in and established a position here. You see this old position back here. This is, if you look at the bottom of my screen, you can see the date. It says May the 4th, 2026. And then you see they have this green buy zone here, right? But look at the price. The first time it came back, it bounced and pushed up out of this older zone. But then on that big giant sell off, did it randomly bounce just at a random spot, or did it come right back to where they bought it last time inside of their buy zone? So it pushed all the way down and came right to an older buy zone where smart money, which is what we call the billionaires, it came right back down to where they previously bought the stock. Now, these people like to do most of their work on like the higher time frames, like the daily and things like that. And so we can see now, looking at even at SPY's chart, we see that they sold SPY off June the 2nd, right? It dropped down. They pushed it back up. Look where it got hung up at again. At that same level. This was 2 weeks later, but at that same sell zone, it touched it, and these sell orders started triggering again. It created bearish volume. It pushed it back down again, and now it's up here again in July. The next month got closer near to this sell order block. People that were pro traders or regular traders, they realized that, okay, last time we got up in this range, we got rejected. A lot of traders can see this if they're trading the correct way and looking at order blocks. They saw this sell wall sitting here. This is like you driving a car and you're in your calls and you're heading right smack dab into a brick wall. Are you going to get out once you crash, or are you going to get out and start trimming your position because you already know that you have a bunch of sell orders right here? So does it make sense to go long where we have a bunch of sell orders? No, what I'm saying, you want to start trimming. So they did start trimming before they hit this wall, and then we push down again. So we've been kind of just sitting here floating at this red zone here. The buy zone on the daily chart is way, way, way down here at 640, but we may have a demand zone closer than that, but I'll see. I'll turn it on and see. But we can see, all right, so right here we have some demand sitting down here, which is why I built this other indicator. And we see that when they first dropped and they shot back up, We had some demand come in and push us up, but it wasn't a coincidence that it came down right back to the same buy zone and pushed up. So we can actually see when you have a proper chart to try to attack the stock market, we can see where they're buying, where they're selling at, and so that gives us an advantage in a sense that we're not trying to buy calls this close to a sell order block. If I'm going to buy calls, I want to buy calls near a demand zone, right? Or near a bullish where the bullish orders are. And also, we know that this is where they are accumulating SPY to push it up. So if I'm going to put my thousands of dollars or my hundreds of dollars into SPY, I want to do this with their money. You know what I'm saying? Because now I have their money protecting my money. So when they come down here and they push the price back up out of here. Now I'm confident. Okay, I see that they bought SPY around 724. Then I'm willing to buy SPY, even if I'm not in it at 724. I'm willing to buy SPY at 735 with a cushion of 724 under me because they're going to defend their own position, which they did here. So they bought SPY back on June 9th, and it came back over here at the end of that month. They defended. This is what defending a position looks like. So they bought in here. It pushed back down to this area again, and they started pouring money back into it and shot it all the way back out. And so that's the first thing you have to really understand in trading is how do you know where they're buying and selling at? Because you want to be always aligned with the people with the money. You know what I'm saying? You want to be always putting your money in with them. And they constantly do this. Like look at Apple's chart. They bought Apple October 2025, right? This is October 2025. They bought Apple. It pushed up, came all the way back over here, January 2026, bought it in the same spot. They defended their position. So, yes, I would get in and play this position with them. They pushed it up. It came all the way back down here again in March. Almost like every quarter, it looks like they're buying Apple at this range. And in March 2026, they bought it again in their same area. And then they proceeded to leave out. So how do I play this? I will let them come down here. And then once they prove that they're defending it, you will see price leave out of this range, start closing bullish candles outside of this range. That means they're done accumulating their position. Now we can run it back up. And now I know that I'm trading this with them, not against them, right? So when I see this type of activity, we let the price push up. So I'm just covering this so you all can understand my technique, what I look at, how you can understand and see, not be trading blind. And you got to understand that they do show you where they're buying it, just like Alibaba. This is a bearish example, but they sold them here. They sold them right here. Price pushed down. When it popped back up, look where they sold it at. Back at the same order block. Then price continues to drop. And we're still in this bearish trend, right? And it's trying to break out of it. And so when you know where they have accumulated stocks at and you know where they're buying and selling at, this is what helps you to kind of be patient and wait and not kind of fight against them. And you can see the same thing every time frame. Even if you're a day trader, you will see the same things like on a 15-minute charts and stuff like that. You will still see these zones that will show you where they're buying and selling a stock, you know what I'm saying, where they're trying to get into a stock at. And this will help you and kind of keep you aligned with them in the sense of this is where a good price point to buy a stock, right? Same thing here with SPY. We pushed out of this demand. We came back down to the demand zone here, and then we pushed back out of it again. We came back to the same spot again here, pushed back out of it again. So you're actually watching their process of when they're buying low. So anytime you're dealing with smart money, that's why they call them smart money, and they try to call us dumb money, but it's because they're going to buy low and they're going to sell high. They're going to buy low and they're going to sell high. What do we tend to do? Man, the price is dropping. It's super bearish. Man, I'm not going to get in why this thing is just tanking down like that. But you don't understand there's a GPS on your chart. You're looking at the location. Where is this happening at? And then what's the market structure overall? But from that GPS perspective, you got to understand that they're trying to push price back to a location where they can buy low. And then after they get satisfied, okay, we got our position. If I put $50 million or $10 million into a SPY position, what am I trying to do next? I'm trying to turn a profit. So if I get my position down here low, I'm trying to push this thing up and let it push up as high as possible. And then I'm trying to take profit, right? So they have a vested interest. Once it comes to that GPS location that's attractive, that discounted location, they want to cash in on that purchase, right? And so just like any other investment, so allow it to leave out of here. And notice I said they allow it to leave out of here. If they wanted to keep SPY sitting down here for a little while because they wanted to keep on buying it, they would do it. You know what I'm saying? They would keep every time it try to pop up a little bit, they'll sell it before they can try to push it down lower. But they're going to push price down to an area that's attractive to them, and then it will allow it to leave. The benefit that we have in the way I trade is that I'm looking at everywhere that they're going to push it to and everywhere that they're going to sell it. All I have to do is zoom out of my chart and I can see ahead of time if SPY broke above this level here, it's going to push up and hit this level. All right. Now, the other thing that I'm going to touch on with order blocks that I didn't touch on last training, I don't believe, is that it's very important for you to realize when an order block, which is these, so the green, just think about green money. This is buy. Red is bad. Well, not bad if you're buying puts, but we don't care if it's selling off. We just want to be selling it off with them, right? But red just represents sale. They're selling it, right? Green, they're buying. Red, they're selling, right? And so these order blocks become very important when you look at one, especially when you get to like the 1 hour and above, the 1 day and above. When a stock is coming down to one of these buy zones and it has never been back to that zone to test it, those are your biggest money makers when you're dealing with supply and demand, right? So what does that look like? I'll try to find an example recently. Let's see if we can find a recent example of a stock doing that. But when you see a stock coming back down and say, I don't care how bearish it is, and if it's crashing back down and it's coming toward an area on the chart where it has a zone like the ones I just got done showing you, a buy zone or a sell zone, and it's going back up there for the very first time, there's a very high chance that it's going to touch that zone and it's going to sell off, right? And so, I mean, let me think. I think Meta's been Meta's been doing a lot of crazy stuff, so it may have some areas like that on its chart. Um, Meta's at one right now on the 1 hour, right? But it looks like it's touched this a couple of times in the past. But this isn't a good example here. You see how this this zone was established here. Meta pushed out of this zone, and then it was on what, the 6th, oh no, the 2nd of July. It pushed out of it. But it's important when it comes back to this zone, not just because it's a buy zone, but it's a word called unmitigated. That means that this zone has never been tested, it's never been challenged. And so when it comes down for that first challenge and that first test, what tends to happen is smart money is going to push the price down into that lower third of the demand zone toward the bottom part of, so under it, right? The reason why they do this is that you always hear some people here throw this term around, liquidity. Liquidity on a chart, if you think in your mind right now and just think about anything on your chart that you will bet money on. What I mean by that is, what do you trust your money with? A lot of people live and die by the 9 EMA. A lot of people live and die by the 200 EMA. Some people say, man, this thing comes down to the 20 SMA. You know, I'm finna buy in. I'm gonna bet big money once it comes down and touch this moving average. Some people say, okay, I trade supply and demand. As soon as it comes down and it hits the top of this demand zone, I'm in my calls. I'm gonna set my stop loss right under this demand zone, right? And a lot of people that trade supply and demand are trained to do that. And that to me, from my experience, and I've been trading now for 16 years, uh is not a good idea to put your stop loss under the low of the candle attached to the demand zone. Why is that? It's because you've been trained like that, and a million other traders have been traded like that, trained like that, and everybody trusts the 12, and everybody trusts the 21, and everybody trusts the 50. Smart money pays attention to what we trust specifically because they don't believe we trade correctly, which we don't. And what are they? So if I trust this demand zone with my money, and a million other traders trust this demand zone with their money, and we all gonna put our stop loss down here because, man, if this thing pushes past that demand zone, then That invalidates my trade thesis, kick me out of the trade. Guess what all this is down here? Free money, because you have your stop loss here. And if a million people got stop losses in on option contracts, this is millions and millions of dollars sitting down here. And the stop loss is a market order. So if I want to buy Meta and I want to buy Meta for 580 or lower, I already have a big giant liquidity pool of people that already told me, and they can, just like I can see their zone, they can see all our stop loss orders sitting right here. So they're going to push price down and stop all of us out. And that's going to force you to sell your position to them. And even though your thesis is correct, that Meta is about to go up, is at a first test of a demand zone, your stop loss is set incorrectly. So they're just going to push the price down. They're going to do a stop loss hunt. They're going to trigger all these stop loss orders, force you to sell your positions to them, all your shares to them. And that helps them fill their huge buy orders. And so they have to go to places on the chart where enough liquidity is sitting at that can fill the massive orders that they have. So that's why this what it looks like when smart money is buying a stock. It looks like the world is crashing, right? They're going to send this right here used to be a huge red candle. They're going to send a big, gigantic red candle down, similar to this right here. They're going to send it down like this, like a missile, and they're going to come down into this demand, and they're going to push under it, and they're going to get their positions filled. And then when you know they had a position, you will see them step in, that buy pressure will come in, create a wick. But more importantly, they'll do what's called a reclaim. They're going to reclaim price back above the top of the demand zone, and then they're going to proceed to skyrocket it up because now they have an investment. They're ready to get paid, right? And so when you look at the things that you trust, just tonight, when you go back and look at what do you trust the most? Is it the 200? Is it whatever? Go back and look at the activity or the wicks around that. When you see those strong wicks going right past your 200 and then you get stopped out, or it makes you panic sell and you just dump out your trade and then it turns around, you like, man, it's like every time I get into something, I get stopped out, then it just goes straight up to where I thought it was going to go. That they can actually see your stop loss orders. So if you got them placed in a weird spot or an obvious position, yes, they can see you misplaced your stop loss. They can see that you have liquidity sitting right here under an obvious structure like a big giant support level or demand zone or the 200 moving average. They can absolutely see your stop loss order on their chart or on their order books. They go right down there to it, fill their orders because they need something. If they want to buy something, they need somebody willing to sell. You've already said you're willing to sell. So they go to where you're willing to sell at, fill their orders, and they take the price back up, right? So that's the mechanics of how you utilize these order blocks. And it happens the same way on a sales side. I'm just going to invert this chart. And a lot of people that scared to play puts, you can use this inversion sometimes too when you're trying to see. I do this all the time when I'm doing technical analysis. But if we were looking at this from a put side, if I flip this over and just imagine that this was a sell zone, it would be the same thing. They will push price up, try to make it. So if I'm trying to sell you something, if I'm trying to sell you a house, what do I have to do? I have to dress that house up. I have to do some landscaping on it. I gotta go in there and throw some marble stuff in the kitchen and all the little fancy fixtures that everybody think, try to modernize it a little bit. I gotta fluff it up and make it look attractive. So when they're trying to exit out of a position, they do the opposite. They gonna make Meta look like it's gonna go to 800 today. You know what I'm saying? So you can, and what's that cause you to do? FOMO. You get the fear of missing out. You're like, oh my God, Meta taking off. It's leaving. The train is leaving. And you start panicking. And they start putting these big, beautiful green candles up in the air. I had this chart flipped. So imagine these are red for this example. And so you push these charts, they push it up, and you will see these big, beautiful, the biggest green candles you ever seen. You'll see JP Morgan news flashing on the sideline. JP Morgan just raised the price target of Meta, and they raised it from $580 to $750. And that ceiling starts looking, okay, man, like this thing is seriously undervalued. And I'm finna go ahead and just pull the trigger. You know what I'm saying? I'm gonna go ahead and pull it. And as soon as you pull that trigger, especially if you can't see supply and demand or order blocks on your chart, you jump in on that big giant green candle. Then what happens? They snatch it all back down because when you're entering the stock market, you're either entering and putting your money in to fund somebody else's exit, or you're getting in and you're going to make some money. when you chase those big green candles and you don't understand the GPS of your chart, you don't understand that you had a area where they're trying to get above this on a first test and sell it off, then you become their liquidity to exit. So they sell you their bags and you become the bag holder, and then you're down on your trade. So you got to understand where you are on the chart. This just happened on Nvidia. I put a call out in the Discord. I said, hey, Nvidia's at an order block, and you see how I have these circles on here. I said, hey, they're at a level where they've constantly rejected. They have to close a 4-hour candle because the order block was on a 4-hour time frame. I said they got to close a 4-hour candle above that level in order to go higher. And what did they do? Look where they took price to without even looking at it. If I take this upper third of that order block and go to the top of it, look how beautiful that candle is. Look at that. Wow. Pushed it all the way up. The biggest candle ever. Nvidia is definitely finna go to what? 220 right now. But did it go right now? No, because in order to validate the move to go higher, they would have had to close a 4-hour candle above the high of this supply zone. But they did not. They came very close, but almost doesn't count, right? So it pushed up, almost did it, but didn't. And what did they end up forming? They came up here, exit their bags temporarily, right? And then look at the price now. If we flip over to extended, they've pushed down after sweeping that liquidity in that range, and then they dropped it back down, right? And so they swept. This is called a liquidity sweep. So they came up here, and think about it, liquidity is nothing but orders. They came up here, they made somebody say, hey, man, I'm finna jump in NVIDIA right now, and I'm finna buy some calls for the end of the week, whatever, which ain't a bad idea because of what it's trying to do. But if you had 0-day contracts today and you tried to jump in on that big breakout all the way up here, then you know what I'm saying, then they didn't do what they needed to do to earn your money to go higher. So that's why we understanding these order blocks. You have to close above them on the time frame that they're on. Okay. So that's just an in-depth understanding of the order blocks. And that's important because if you don't understand that these are their buying positions that they use to enter in a stock, like look at them rinse and repeating NVIDIA. Drop, came down here, pushed up, came back to the same spot, pushed up. Where did they sell off at? Same zone they been selling off at, pushed down, sold off again here. They back at that same orders. And so every time NVIDIA sits up here, they're filling all these sell orders. And once they close above this is what it means by conquering this territory. So this is like just like you if you were in the battle. Think about an army. And that now NVIDIA done set up camp. This is a this little green patch right here. They didn't set up camp in the bearish order block territory. So they're trying to close just a 4-hour candle above the high of this candle, which is $213.99 for NVIDIA. All they need to do is close a 4-hour candle above here. This red zone is going to disappear. And now your range becomes very clear and easy. It's really going to be easier money because then you just be looking for a break or retest of 214. And then they're going to try to go tackle. They're going to go through the same. You see how they went through all this pain right here? They're finna go back and face the same thing, but the new battle is gonna be at 221 to 227. And so the same thing is gonna happen, but what else is gonna happen? This is gonna be our first test. So when we pop up here, I don't care what the news talking about, or whoever have headlines coming out about Nvidia, they got this deal, they got that deal. Guess what's gonna happen? They're gonna push up, they're gonna get right to the top of this thing. Smart money gonna be right up here in this upper third. We're really in this whole little range because you got an order block on top right here at the bottom of it. As soon as you get up in this range right here, it's gonna push up. They're gonna give you one of these nice, beautiful green candles, and they're gonna pull the rug back down, and it's probably gonna come back around this 220-ish range and consolidate. You know what I'm saying? It's gonna do something like that. They just did it already, right? Look how good and nice looking this candle was. Just imagine this candle right here. This was a huge green candle, right? They pushed it all the way to 234. But what were they doing? Just exiting, just put their position. They bought in down here at 209, and then they pushed it all the way up to 230 something. But what didn't they do? They didn't get rid of the zone, right? So they closed back inside of the order block, and then they dropped it all the way down from 230 all the way down to $190 because they didn't close above that level like they were supposed to. And so you use your order blocks in that way. So today I was calling out some things, and if you're not a part of the Discord, um, Let me go into the chat. I think I got the link copied already. I'm gonna post this link inside of here. So my goal with the Discord is to cut it off at 5,000 people. We're not near 5,000 people right now. I think we're not even at 1,000 people. So this is like y'all at the early stages of that goal for me. But I'm just being transparent with the goal. So once I get to 5,000, a lot of people that's been training under me for a year or more, they already know sometimes I will cut off, doing free access and just focus on who's in there to make sure that I can take care of the people as far as helping them, as far as learning how to trade. But 5,000 will be our cutoff as far as the Discord, and we probably open it back up like 2028 once we get that number. Now, this for the free Discord anyway. And so I just put the link to the Discord inside the chat to this Zoom if you all want to get into the Discord for free. All right, but anyway, when I was calling out plays today, I'm just going to give you what I use so you all can kind of understand how I do what I do, right? So it's an indicator that I don't care what chart you have, especially if you have the wolf chart. Uh, Breadman in our Discord told us about AYN, which is a good indicator to have, but it's good. It's as good as the confluence on the chart. So with the wolf chart is basically two indicators, right? It's just these two. Let me take these off. So the wolf chart is just these two indicators you see on the screen right now. That's it. That's all it is. And between these two indicators, what you get is your trend analysis. So we use the 12, but instead of me using just a 12 EMA, I didn't want to, I'm not about getting to the battle of if is the 12 EMA better than the 12 SMA, or if the 12 SMA better than the 12 WMA, and all these different versions of these moving averages. What I did is I just made the 12 cloud, which encompasses all those versions of the 12. So when we get over the 12, we over all the 12, which is this blue cloud. And this yellow cloud is the 200. So is the 200 EMA better than the 200 SMA? We don't care. This is all the 200s. And so now I don't have to second guess. Am I breaking over? Like right here, we broke over the 200 SMA, but the stock sold back off. But when we got over every version of the 200, which is this yellow cloud, then you see how we proceeded up. And so what I did is put dynamic color change. So a lot of wolves miss this part, even advanced wolves, people that's been in here for a while, the simplicity of what the wolf chart is saying to you when you zoom out and just really pay attention to what's going on. When this 200 cloud is yellow, your bias is bullish. All right. A lot of times we waste time on, man, I don't know if I want to buy calls or puts. Once you establish your trend analysis, when you do look at the daily, the weekly, and your 4 hour, and it's bullish, we're not talking about what the trend is no more. We're talking about two things. Are we buying calls at a pullback entry, or are we buying calls at a breakout? That's it. Once you understand what the trend is, we're not fighting the trend. We're looking for entry. You know what I'm saying? We're just trying to get a precision entry that gives us minimum drawdown. Okay. And so once I know my trend, the reason why I can execute every day, and I do mean every day, I find something to trade and execute on, is because once I understand the trend of something, then I got them. You know what I'm saying? Like I'm just using my WTMA, which is a moving average I created, and the wolf chart is just telling me how everything's aligned, my timing and stuff like that. But when I look at this 200 cloud, and especially when it's merging and it's agreeing with my 12, we bullish. Now just pay attention to nothing else but the 200 cloud and just zoom out. What's happening when you above it? You in an uptrend. What's happening when it's red and depressed? You in a downtrend, right? When you're above it, you're in an uptrend, right? Above it, you're in an uptrend. And so when we having these short pullbacks, then the 12, the short-term trend detection system, which is our 12 cloud, and you're getting under every version of the 12, that's gonna signal, look when it's red. You see you dropping, right? When you get yellow and blue, you're in an uptrend, right? And so when you're paying attention to what is the trend, answer that question in your with your eyes. Hey, the trend is bullish, right? So even though we having these pullbacks to support and things like that, the trend itself is a bullish trend, right? Now, because I know this about my chart and I know this about the 12, and I know this about the 200. Uh, to limit my, you know, my cognition, I'm not wanting to be scatterbrained and all over the place. You know what I'm saying? I built screeners for this, right? So like these screeners that I give you guys. So to get a screener, all you gotta do is own a wolf chart and then take a private class. So I don't give the screener out. Uh, I make you do a class because I'm looking for people that's serious about trading, and also I make it. Saying it's a $125 class. However, I do that because I need to train you on it, and I need to train you on the other indicators that I'm giving you. So when a person gets the chart, the reason why I'm so adamant about, hey, go get your certified wolf chart analyst certification. What does that do? If you spend most of your time when you first get the chart and you spend them first 2 to 3 days or 4 days or how long it take you getting your CWCA by this AI that I created that teaches you how to trade the chart. It knows everything about the chart in the Discord, and it would train you and get you certified in the chart. By the time you finish your CWCA, everything I'm saying right now, even if it sounds like I'm speaking another language, you will speak my language. You'll be like, oh yeah, I know about the order blocks. Yeah, I know the 12 cloud. I know the 200 cloud. I know what change of care. You will know all these things within your first week, and so you will grow from a knowledge perspective very quick because you will understand everything by getting that certification in just a week or so, right? And so the reason why I say that is that when I build a screener, I build it based off of my trading journal, what has been successful, how do I know what stock is going up or down or whatever. So if I'm in the market, I can easily put this screener on the side. And so when I'm calling out things to you guys, I know Tesla is bearish because it's on my bearish screener. My bearish screener is already screening for price to be under the 12 and under the whatever needs for a bearish technical perspective, it's already screening for that. And so everything on this list is going to be something that's dropping, right? So if I want to buy puts, I'm not going to buy puts. Now if you once you get experience, you'll realize this. You have to be a bully to buy puts, right? You can't be a hero to buy puts. A lot of y'all see something going up and y'all, oh my God, man. Hey, MU been going up for a long time, and y'all saying that at $500, $700. Man, MU been going up, man. It got to fall one day. I'm gonna go ahead and get me some puts, and you try that every week, buying puts on the strongest stock in the stock market. And what happened? It took you all the way to 1,200, right? When you buying puts, you got to be willing to be a bully. I want to kick the man while he down. Give me everything that's weak and already dropping, and then I'm gonna buy puts on them. Right? I want to buy puts on something that's weak. Why? Because if it's weak, that means it's going to drop. And if it's going to drop, and I'm buying puts, I'm going to make money. It sounds like common sense, but I'm trying to tell you, a lot of people don't understand that you want to buy puts on what is weak. You know what I'm saying? Sometimes you can catch something topping out, but you will also know that because if the stock is topping out, you will see it lose the short term trend. Like if it's pushing up and then it starts opening and closing candles under the 12, yeah, it's gonna try to pull back. But while it's doing this right here, I'm not trying to play puts on this stock when it has an uptrend, right? Because the money is gonna be made to the upside. And so if I want to buy calls, so what I have to do, I have to filter the market for stuff that's buying calls, right? So stuff that's going up. And then I have a stronger screener, this Wolf call screener. It's even stronger than this right here, this top movers. It's just looking at, okay, what's very bullish right now? Like what's bullish like right now during the market hours that has the trend that's really established on the 1 hour, the 30 minute, and the 15 minute, so that I can jump in and day trade. Now this list was filled up with stuff like Nvidia and all types of stuff as when the earlier in the day, so we was able to catch a lot of them trades. Right now, this other stronger screener is what I use to where if all right, tell me I want to buy stuff that has a mature higher time frame trend established, but also this is a day trade. I got a swing trade version of this and I have a day trade version of this. I wanted to have all the higher time frame technicals lined up for me to trade, but I also want it to be above the pre-market high. Why is that important? Because if you trade and you understand your pre-market high and low, so what is the pre-market? In the morning time when you be getting up and you be panicking because you got inputs and that thing that went up $5 and it be in this little yellow field over here, that's pre-market. When it's moving and you can't do nothing about it and you're in options, that time. This right here, you see how I got the high of this candle and I take the low. If you understand the high and the low of the pre-market session on any stock, once it starts breaking above pre-market high, if it's technically aligned, that thing gonna go. You can literally do this on any stock. If you understand your pre-market low and your pre-market high, which is this candle, a stock is going to fight all morning to get above that. And once it does, you see how we got a breakout. And then to the downside, if you have a stock that breaks the pre-market low instead of the high, that stock, this is the pre-market low right here on that. You see how I'm just mapping out. So I'm drawing a box. Don't pay attention to where the box start. I'm looking at the highest candle and the lowest candle in the pre-market session. That's what I'm looking at in this little yellow area, right? This yellow area is the pre-market session, right? So what I'm saying is when you go into pre-market and you start looking at the like AMD had a huge pre-market high and low, which is this candle. But if I grab the high and the low of that candle and I drag it across over here, you see how Nvidia, I mean not Nvidia, but AMD tried to break it, broke it, they broke out, and you see how they got stagnant after that initial move. They got stagnant after that breakout because now they were stuck between bearish sell orders and the pre-market high, right? So they pushed up, chop, 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 pushed up, came down, tested the top, but they were in a tight range, right? But any stock you go to, I promise you, if you understand the pre-market, and even if you do ORB, uh-oh, I'm grabbing the highest candle here. The lowest candle is this candle way down here, right? And this is Exxon Mobil, and I bring it over here to the session, right? This is the intraday session right here, right? And so you see how we rejected, broke out of it, came back down, retested it, and then we started holding the pre-market levels and had a little decent dollar or so move. But any stock you can do this on and you will catch, saying, a breakout. You'll catch their breakout range, right, for the day. This is Dale. This is the highest candle. This is the lowest candle. And if I grab this range on Dale, you see how we broke pre-market high. And I just want to show you a bearish example. If we're looking at puts and you're trying to time puts on stocks and things like that, they had a really small pre-market range on Google, right? Not a lot of volume. I think this is the lowest candle right here. And so if I grab and drop it here, you see how they were playing around with the pre-market range and they finally opened and closed the candle under the pre-market low here and they started dropping down toward the end of the session, had a decent drop. But same thing, like it goes for any stock. When you understand that range, that's what's going to help you when you're trying to day trade and things like that. But if you have so I've given a lot of people, anybody that's taking that class, this screener, because like I said, my goal is to make you independent. So I'm not trying to gatekeep the how I do what I do, because I want you to be able to do it, without, whether I'm in the Discord that day calling stuff out or not, right? I don't want you to become dependent on me. If I miss a day, then you can only know how to make money, right? And so when you using these type of screeners and it's filtering the market for you, all you're doing is looking, okay, what's consistently on this screener that's strong, and with me putting it here. So the way you do that on TradingView, you see how I have this little target looking screener board thing, this little thing I'm clicking on to the far right hand of my screen. If you follow my mouse, if you click on that, your screeners will pop up instead of having it on a separate tab. And then what does this do? When trading, you still need speed, but I can easily get through all the bullish stocks very fast, right? And know exactly, oh, okay, this thing. And what I look for immediately is two things. And one of them comes with, or it's a reward for you getting your CWCA, is the WTMA Cloud. Coach leans on the WTMA Cloud with the WolfChart a lot, right? Now, the WTMA Cloud is this funny looking cloud right here. I got it, the colors turned up on it, but you see how this cloud right here, I'm gonna turn off before y'all can see it good. Pay attention to it. All right. Matter of fact, I'm gonna keep the 12 cloud on. I'm gonna just take the WolfChart off. All right. So these two clouds, the 12 cloud and WTMA cloud, have a very interesting relationship. And when I'm looking for a stock that's bullish, when I'm going through my screeners, the first thing that'll kill it is the WTMA cloud. If that stock is fighting the WTMA, you see how it's stuck inside the WTMA cloud right here, and it's stuck in the inside of it here, just compressing. But when price is under the WTMA cloud, and especially if the 12 clouds above it as well, you get a comfortable, easy trade, right? And so I leverage the WTMA cloud for the breakout possibility of the stock quickly. So if I'm going through a list of stocks, and say if I just go to I'm gonna go back to, let me see, let's go to this screener right here. All right. So Nvidia, when it started today, it caught my attention. I called it out when it was at 209.50. It pushed as high as 214, right? But what stood out to me more is that its price is above the WTMA cloud. It's already on the screener. So I know that the 1 hour, the lower time frames that matter for the trend are already on point. So I'm looking at the 15 and I'm looking at these to see, okay, what is it doing in regards to this 12 cloud, my 200 cloud, and my WTMA cloud? This stack right here, 200 WTMA 12, is extremely bullish when you see that, right? And so the WTMA cloud can smoke out a trade. So I'll just go through my regular watch list and I'll show you kind of what it looks like when the stock is just gonna struggle with it. You see how, look at this, we're above it. That's a decent trade. You get inside of it, it's going to compress the price and slow down your movement. And then once you get out of it and the 12 gets under, it's gonna drop it. You know what I'm saying? It's gonna drop it. And so this is I use this right here when I look for parabolic moves on a stock. When I see a stock and I say, okay, this stock is going to make a big giant move, and I know it's going to make a big giant move. I look at the positioning of the WTMA cloud because it can tell you when a stock is going to make a huge move because of what it is and how it tracks institution buy pressure, right? So when you see a stock drop bad, you can bet your bottom dollar that it lost that WTMA cloud. You see how it got inside over here with Tesla? Look what happened when the 12 crossed out of it. Big. Now this is earnings though, but you see how it just started giving up and dropping, right? Any stock, you know what I'm saying, when it comes up and when you breaking above the WTMA cloud, you can do good. But when you start losing it, now look at this stack. We went and tested the 200. Look what happened. 12 cloud crossed, got above the WTMA cloud. It flipped green, which means candles are above it. Crossover, parabolic move, not a regular move, parabolic. This is a big move for Apple. Over here, you get back in the inside of it, you compressing, right? This is the pre-market session. Then we break out of it, we broke out, and then you bearish, right? You can't get back above it. It's stuck. It's very, very, very. It's like a when I was telling you all about the red bearish order blocks, the WTMA cloud is like a dynamic moving around the chart order block. When it's green, it's like a huge bullish order block that's moving around the chart. And then when it's red, it's like a huge supply zone moving around the chart, right? And so when you see these, so that filtering through stocks, and I see the positioning of the WTMA cloud, I know that the stock can make a decent move or pop, especially the 12 cloud is trying to mount that level and give it a push, right? And so between these screeners, me vetting the potential of the trade with the Wolf chart, the WTMA, and I don't want to go too technical because I know we have people that never seen a Wolf chart. I'm just showing you some of the trend detection and the move detection that I utilize when I'm making call outs and how I be knowing when a stock is going to drop bad or when it's going to do certain things. Like if you have your WTMA cloud turned on and you see Palantir open up and the opening session is a 12 crossover, right? You got 12 crossing the WTMA cloud. You got a bear stack. You got the 200 WTMA 12 cloud fanned out like this. It's finna get smacked and it's going to be very difficult for it to get back above it. And then next session, when you see this right here, that 12 cloud cross back above the top of that, and you got this much space between you and the 200, when you get that crossover back up, then it can pop up and run back to, 130 and things like that. But While it's inside of here, it's going to compress. It's going to be compressing like really tight. You see how we were dropping, dropping, dropping. And as soon as you get back inside the WTMA Cloud, look at the size of these candles and how they're being compressed. This is after hours, but it's going to be small candles anyway, but it's compressing, right? Same thing here. We're compressing. Even during the regular trading hours, compression. We just popping inside the cloud. And then you either going to push up, reject. But when I say compression, look at the wicks on the candles. It can't go up or down with any kind like it's just up, it's just compressed wicks until you drop under it, and then it lets it go ahead and drop. But you're not going to just bust through here. That's why when you finally get through the cloud, like when we go here, when you finally get, so you're getting beat up, you testing it, you can't get above it. When you got the crossover, parabolic move. That's why I keep telling you it's a parabolic move detection system between that 12 cloud crossing the top of it, not a regular candle. Like as soon as you crossed over, you got a big breakout because it's very difficult for price to get back above that cloud, right? Right here. It crossed over, crossover. Not a regular move, but a big run up, right? A big run, a $4 run up on Palantir can make you a lot of money if you time it correctly, right? And so, but it works like this on, I don't care if it's futures, I don't care if it's whatever, whatever you trade. Um, the only thing that I have to recode that doesn't cross over as well right now is the time frames on the supply and demand indicator. So outside of me, this is what I look at. I'm just trying to get you all in my head on when I'm trading. This is what I use, and when I'm entering into stocks, I use the WTMA, which is the other part, the other indicator and moving average that goes with the wolf chart. I use this in fair value gaps a lot when I'm entering, and I use the 3-minute time frame a lot when I'm entering into trades. And so, like today, when we looked at Nvidia and a few other stocks, when I have my entry here, when I'm looking at a breakout, once I see that trend is locked, I will use like the 3-minute chart because you can see the moves quick. Everything I can see on the chart is going to have the same patterns. Whether you can see the same breakout pattern on the 1 month, it's gonna run for it'll be a breakout that will last a decent amount of candles, 6 to 10 to 12 candles with these same breakouts. So you see how we had this trend line, we got this what we call a floating candle. That means this candle just opened above this trend line for a confirmation. We got the WTMA. I got it turned off right now. Let me turn it on right quick. But we look at these confirmations. So when you're moving with a confirmation, our confirmation for early entry, I move in phases. When this lime green line crosses this red line up, that's the early phase that they're accumulating, about to get ready to push the price up. So we have this WTMA crossover. The second phase is trend based. So this right here just tells us the institution has come into the trade. They're committed to pushing this trade up when we get to crossover. You pay attention to my chart, cross down, we pulling back. We cross it up, we're going to get ready to break out. The second phase of the trade is, okay, did we recapture the short-term trend? Our short-term trend is the 12 cloud, this blue cloud that can flip to red if it's bearish. It was bearish right here. Now it turned back blue. That means our short-term trend is already recaptured by the bulls. The 12, any kind of moving average, the number in front of it just represents how many candles it's capable of looking at or is coded to look at. So the 12 is looking at the previous 12 candles and saying, this is the average, just like in math. Like each one of these candles have a closing price, and that closing price is going to be, 207.60. It's looking at the closing price or the price of the 12 previous candles, just like you were averaging math, adding all of them up and then dividing them by 12, and then you get a price. So it's a moving average. That's all this line is, just a moving average. The 200 is looking at the previous 200 candles. And so it's our long-term trend detection. So the long-term trend is bullish. We bullish. This yellow, blue, I'm bullish. I'm not looking for puts. I'm looking for calls. I ain't got to go back and reevaluate. Is calls the right thing to do? I'm past trend. I'm on execution. And so my brain is thinking now in execution phase, right? Now, once I get, especially you start getting some easy ones like fair value gaps, for example, and we're just going to cover this before we close. I'm going to stop in about 10 minutes with this train. I don't want to do too much, and we'll pick back up on fair value gap and exactly how I enter in more depth. But we have a confirmation here. We have a confirmation here, right? Now, why did I enter on this candle? The reason why I entered on this candle is because we got the fair value gap here. And I could have entered on it was one of these. I think it may have been this candle. Let me see, 209. I called it out at this time. Matter of fact, I think I entered on this candle right here. I called it out. I put this call out on the actual time that I called out in Discord. So I didn't enter it as I called it. I entered after I called it out, but I was able to enter in because it gave me an easy entry. Why was it easy? A fair value gap is made by three candles. One, two, three, right? And so this gap right here, you see if I take the low of this candle, which is the third candle. So I'm looking at these three candles. One, two, three. It takes three candles to make this little green patch, right? And these little green patches sometimes work like little trampolines because they just miss buy orders, right? Or imbalance. So when you plan a fair value gap, you either gonna have one or two entries. You're gonna have a pullback entry that's gonna dig inside that fair value gap, or you're gonna have to play the breakout entry if it's not willing to come back, right? So what's the entry? So I'm either gonna enter since we have one, two, three candles. I can't play this candle as the retest one because this is part of the candle that's actively creating the fair value gap. It takes three candles. One, two, three. The fair value gap is going to be the size of the low of the third candle and the high of the first candle. So the first candle's high stop here. And then the low of the third candle stops here. It's the exact size of the fair value gap, right? So this is what makes the fair value gap, these candles. Now, what tends to happen is this next candle could have pulled all the way back and came down back inside this fair value gap and tested the 12. That would have been my favorite entry, right? The pullback in a bullish trend. Like I said, I'm buying calls. I know the trend is bullish. I'm not thinking about puts. So when it pulls back and gives me that red candle, I'm going to buy calls because the trend is bullish. I'm just going to buy calls at a retest at support, which is what I prefer. Now, because it decided not to do that, it came here and then it opened another candle. This candle stayed green. I couldn't get into this candle because in order for me to play a breakout, the candle must close above the high of the third candle. So let me put a line at the high of the third candle so you can not get it confused. We're dealing with these candles right here. One, two, three. I'm not worried about this new fair value gap. I'm playing this first one. One, two, three. I'm going to put a line at the high of that candle. This candle did not cut it. It didn't close above the high, so I couldn't enter on this one because I might have had to pull back into this fair value gap. So when this candle closed above the high, this was my entry candle, and I was able to push it up to target, right? So you got one target here. My target, I want to get it. I want to get out of this trade at 211. This was my exit. So I started sliding my stop up in this range, but then it just kept going and ended up going up even higher. So I ended up making 100%. I was willing to cut. I think I was up like 40% or something like that, but it just kept going with speed without slowing down and ended up hitting this other target. The other thing about this is that because my lines are automatically drawn, so I did mathematics in the code, it looks at 400 candles to give me this resistance level. But I didn't have to draw this, so it's way more accurate than me drawing a level. That's why you see it touched it, barely touched it, and rejected. Came here, touched it, and rejected, and then it finally got above it, and then it flipped into support. Oh, it flipped into support automatically on all these other candles. So in the chart, these lines are your take profit targets. Take profit targets, and when you hit them, you take profit. You don't hit them and think you're going to do this. You hit them, you either tighten your stop loss or you take profit. Then if you get above that level, then but look, but the boogeyman came on a 3 minute, right? Look at this. Everything is great. We parabolic. We doing just fine. Yellow, green, blue. We good. Strong trend. Look what happened as soon as we slip back inside under the WTMA, but his big brother, the WTMA Cloud, smoked us out and put us straight into compression immediately. And so look at this. We compress, 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 compress. It worked just like that same, how we got the higher time frame, $214 supply zone that was kicking our butt all day. Look where it put itself at. it came up and created an iron dome above price and immediately put NVIDIA in compression, and we expanded down, right? Tried to break above the top of it, could not, broke down again, and it's just not gave us relief over here, right? And so when you get in and look at this, we broke out. Did we do a regular drop or did we drop? We dropped, right? Soon with the 12 cloud crossed it, we dropped, right? And then now as soon as we got back inside of it, what did we enter? Compression leading into expansion, because when I build these indicators, I build them based off a hedge fund style um, mechanics, which is the like what I was saying when we're doing the compression and expansion. And so, not to get too technical, but this is how I trade, and I use fair value gap. I also use candlestick patterns, and I use and if you're interested in using candlestick patterns and learning them quickly, there is an indicator here on Trading View. You just type the word candle, and then you just click on this one that says all candlestick patterns. And on this one right here, I don't use every candlestick pattern. I back tested, all of them, and I only use the ones that make money, you know, easily. So that's the dark cloud cover. Dragonfly dojis are fine, but I don't use them. Evening star, engulfing candles. I don't really use hammers that much, or the inverted. Let me see. Marabazu, white and black. The morning star, piercing. And tweezer bottoms. Oh, tweezer tops, tweezer bottoms. Um, I do use the rising window sometimes, but for this one, we're gonna just leave them at that. These are the basic ones I use. And if you use this indicator, what I also do is vetted by the 50. If you want it to be less, want it to be more trend aware, put the 50 and the 200 on there, so it can be aware of not giving you candlestick patterns that are going clearly against, the trend. So what does this do? If I get a bearish engulfing candle and it's in disagreement with the WTMA Cloud, the 200, and the WTMA, I'm not playing a bearish engulfing candle just because decided to print. But if I get a Marabazu candle and I'm in a strong trend, this is a continuation candle. It's a candle that has little to no wicks, and you can push up. Now, if I get a bearish engulfing candle or a Marabazu candle, and I'm under the WTMA Cloud and I'm under my 12 cloud and it's red, this is called confluence. I got a bearish arc. I got a bearish 12. I got a bearish WTMA cloud. I got a bearish regular WTMA, and I just got a bearish candlestick pattern, which is a continuation pattern. The Marabazu candle, the reason why I like them is because it is designed not to be a reversal candle, but to be a candle that is showing you that it can break through resistance. So anytime you see a Marabazu candle that penetrates a strong resistance or support level, that is the purpose of the Marabazu. When it pushes through a support level, it's letting you know sellers are serious about pushing price down under that. And then if you get an open and close candle under that support level, that's even better, right? And so you see, if you pay attention, like what are we looking at? If you get a Marabazu candle that's trend aligned, does it produce, a push up, bear bullish engulfing candle, pushed up, Marabazu, push up, Marabazu, push up? But I'm vetting them with the um the 50 and the 200 so that when I get them at trend locations, they'll be better. Now I have my own custom version of this that's a lot better than this indicator, but you can start with this one on TradingView, and you can just learn candlestick patterns in a natural way instead of just reading the book and then trying to remember. You can look at this and it'll tell you exactly what a Mark Basel candle is. Um, the one I created, which I'll be giving out to the Wolfpack, just to show you guys an example when I say it's different. Let me see. It's the same type of coding, but it's way more intelligent, and it's it shows up kind of like just trend line by default. But even the learning part of it is like, for example, you get a Marabazu candle and it tells you how to trade it, not just what it is, but exactly how you enter. If you look at the entry is favorite continuation when price holding above the Marabazu candles close. And so that lets you know, okay, when it closed, you're looking for a candle to close above this candle before you trade it. Bearish engulfing and stuff like that. And it also has power candles built inside of it, so you can see the volume increase and other things, other confirmations. And so we'll be getting this one as well. But I appreciate everybody's time. I open up for the last 15 minutes. What time is it? I open up for like 15 minutes to allow you all to ask any questions you have. And we'll do that for like 10 minutes, 10 to 15 minutes if you have some questions for me. And other than that, just make sure you click the link that I posted in there for the Discord access to keep up with me. It is a free Discord, no strings attached. Um, Let me post it again. I know some other people joined after I posted it, but I'll post it back in here again.
Sean, quick question.
Mhm,
I don't remember the time frame the example that you showed us of Meta.
mhm,
I wanted to ask you because I saw that. So I think it was the second candle after that demand zone was created.
mhm.
I when I look at the chart, I would look at it as if that third or that second candle after the candle that created the demand zone as a candle that touched it. When you pull it up.
No, so when you submit it, it has to leave out of that demand, then come back. Not not
Okay, so
not
that's the first candle that I would count.
Yeah, yeah, yeah. Once it
Okay.
leaves, not the accumulation phase. So they're just accumulating right
Okay.
here.
Okay.
So you want to let it leave a little bit and then come back. I see what you're saying. Yeah, that's a good
Okay.
question though.
Okay. Awesome. Thank you.
All right. So what she's asking is like when we were talking
It was the
about,
one, it was the
yeah.
example with the demand, but this works too. This is perfect as well.
Mhm.
But yeah, thank you.
All right. Anybody else got questions? And don't be shy. Just ask. You know what I'm saying? Even if you
Hey,
never
so
even heard of me, just go ahead and ask your questions. All right. Go ahead.
hey, I got a quick question. So say it pulls down into the order block and you're looking for a long entry. How would you determine how long you're going to hold your play? Like as it's breaking out, like how would you determine like, or am I going to get a zero DTE, a weekly, a monthly? How would you determine that?
All right. So the purpose of your time frames is to answer that question, right? So when you get a confirmation, like my confirmation system will give it can reach your first obstacle that'll stop the trade from going into a positive to the direction of your trade within 6 to 10 candles. Sometimes it'll go longer, right? And so when you're using your time frames, think about them in this way: the higher the time frame, the stronger the confirmation, and then the stronger the confirmation, the longer you can stay in the trade because it's justified by that higher time frame confirmation. So if you're going to say you want to say, okay, I want to hold something for, oh, I want to get a mini leap. I want to get something and hold it for 6 months because I just want to hold something for a long time. Well, if you need 6 months to hold something, you need to be on the weekly at the minimum to get your confirmation. Because you try to jump into something on the 15 or the 1 hour and hold it that long, that confirmation doesn't have enough strength or weight to last. It's going to expire within like, you know, 6 to 10 candles of that time frame. So if you're trying to jump into something for the day, that's why the 1 hour and the 30-minute time frames are king for day traders. If you get a 1 hour confirmation, think about the trading day being 6.5 hours. That confirmation on the 1 hour chart is giving you like 6 to 10 hours. So that can run into the next trading day morning off a strong 1 hour time frame confirmation. But the 30-minute will cover your trading day. If you get a strong 30-minute time frame confirmation, you have enough time on that confirmation to at least hit your first target, your take profit target. So if you're jumping into stuff on a 5 minute and you find yourself babysitting that trade and it's lunchtime, it's a strong possibility 90% of the time that you're losing that trade and you're averaging down on a loser. Because if you got in on a 5 minute or 3 minute time frame confirmation, you should have made your money or hit your target within like an hour or like 30 minutes or so if you that low down, right? You understand what I'm saying? So within 30 minutes to an hour, you should have been able to make the money you were trying to make if you're on a 3 minute and 5 minute with the confirmation.
All right, thank you. That answered my question perfectly.
All right.
I have a question, Sean.
Go ahead.
So it's my first day, so excuse my ignorance here, but I got the email, I got the indicator. I'm just trying to figure out the streamlined way to start my training from beginning to mastery. So I know I signed up for the intermediate beginner training for next month. I see you talking about the CWCA getting that. I
Hmm.
know there's a part one and part two training from today, part two, and then the other one on the YouTube. Like
Hmm.
what would you say, like if I could make a checklist for myself on how to go from beginner to expert, what's the best streamlined route for me to take?
Okay, so the streamline thing that you need to do, your first effort, and I'm gonna send you a document that I did for new people as well. I should have sent it in that email. But the first thing that you want to spend your time on inside of the Discord, the channel you need to focus on is this CWCA channel. This is the very first and most important thing. You see how this person has their certified WolfChart analyst certification, right? When you go get this, or when you scroll through here, I'm gonna take you to where the training is, um, and I'll repost it in the main chat, right? So this training right here and this link right here, this is what you need to go to. I'll post it back inside here so you can see it. Go in there and then train with Black Wolf, and then all you have to do is click this link to Black Wolf Pro. This is the pro version, and then copy this sentence in there, and then it's going to start your phases. And once you get past the third phase, you can ask, say, hey, give me your certification test. But you don't use this like something at your job. Talk to it like if you got a question, like the same way you ask me, even this question you just asked me. Once you get in there, talk like you talking to a person. Don't talk like you talking to a computer program. Talk like you talking to if anything you would want to ask me, just talk like that. The reason why I say that is that when you're leveraging AI, and I teach the pack how to leverage AI, you have to talk to it like it's artificial intelligence and not a computer program because it's capable of reasoning. So even if you get in there and you like, bro, I don't understand nothing this man talking about, man. This stuff they just complicated and I don't get it. Once you're doing your training, you can say, hey, I'm brand new, break this down to me like super simple, and it will adjust the entire training program to how you want it to be adjusted, to the simple as you need it until you can get everything passed, and it's going to help you learn super fast, right? And so that's the first where you want to spend most of your other time. Once you get your CWCA certification, the rest of the process is just, I'm teaching you how to find stocks, the Discord, everything I just talked about supply zones and demand zones and getting above them. The alert system is showing you what you need to be focused on trading, right? You see how, like right here, SMCI got above. So you're just gonna be building trade plans. So basically, I'll give you an example. This stock right here is CIFR Cipher, right? They just closed above a daily demand zone, or they just closed above a bearish order block, right? That's bullish. That means that price pushed up so much that the bulls were able to get price above one of those red zones that Nvidia couldn't do today. And the Discord is going to feed you stocks like that so that when you go to their chart, you can just go straight to the chart and it's going to take you to this stock right here, right? And so if I go back and go into replay mode and go back to this chart, you see how this red zone is here, and it was trying to fight Cipher from going up. It has closed above it today. It closed above that, and so now look at the trade. You're above your 200 is yellow. What are you fighting though? You fighting the WTMA cloud is trying to fight you, but you got it back above your 12 cloud. It turned back blue. All right, so now you have a fair value gap sitting here, and this candle almost closed above the high, but didn't quite do it right. And so now what all you have to do once you understand the chart is literally take screenshots of the 1 month chart. So you would go to the 1 month and you would take a screenshot of the 1 month, right? And then if I take it, I'm gonna just go through this real quick so you can see exactly what the process is. So I'll go to the 1 month, I'll go to the 1 week, all right, and I'll take a screenshot of that. And I'm gonna go to the 1 day. All right, let me get the price action right. Now I'm just gonna do the 4 hour just for this example, right? Which it look good. Like it's gonna try to get back above the 12 cloud pretty soon. I mean at the WTMA cloud pretty soon. You got an inverse arc, you coming out of green money, you got a crossover of the 200 right here. You're trying to break through the WTMA Cloud. So now I got these screenshots sitting over here. Then I would just go to that same link I just told you about inside of the see the same vehicle you're using to train you is also going to be helping you how to understand how to build a professional grade trade plan that has take profits, stop loss, risk management. And then so you go here after you went to it and got that confirmed thing. So I'm gonna go. So all I'm gonna say is, hey, you don't even have to know anything. Just ask this question: what is the best command to give you to build an option trade plan? I'm just gonna type that in, right? And then it's gonna spit me out. So why he about to tell me what he want me to give him or what it wants me to give him, I'm gonna come here and I'm gonna grab the screenshots that I just took that the Discord said this stock has did something that's important, like close above a red zone. So I want to, if I'm gonna build a trade plan, I want to build it on something that has a confirmation. And we looked at the chart; it has multiple confirmations, and so we can use this top line here, right? And so I'm just gonna use, and it says the minimum version is this right here, and it put SPY right there, but we're not looking at SPY, so I'm just gonna copy this command and do what it asks me to do. So I upload the screenshots. I put this in here. I'm gonna put what is that ticker? Cipher, right? And so now this is the command they wanted, and then they wanted the ticker name. So I'm just gonna sit it in there. And now it's going to go down because I've trained this thing on my trading style. I've given it all my trading journals. It's going to go and look at and do a full top-down analysis on whatever time frames. You can go further and put the 1 hour, the 30 minute, the 15. You can put all those smaller ones in there, but it's just going to build me a full trade plan. Now, why is doing that? If somebody else has a question, you can ask a question why this is working, and we'll come back and get the trade plan.
Hey Sean, quick question. I know you said you day trade on the 3 minute. If you get a 30-minute confirmation, what strike are you looking at? Are you looking out of the money, or are you looking in the money with like a 30-minute confirmation going down to the 3 minute to make it more precise?
Okay, so if I get a 30-minute, so this is. Are you familiar with open range breakout at all? Like
Yes,
when
yes.
Okay. So that technique, man, like when you do you have a wolf chart or you just have your own chart?
No, I've been with you for about 2 years now.
Okay, I can't see who talking to them. All right. All right. So when you're doing a confirmation with the wolf chart, if you get a 30-minute time frame confirmation or a 1 hour time frame confirmation, right? Once you get the confirmation candle, just use the ORB style, even if it's a retest candle or if it's a candle that broke the top of a what I'm trying to say, the top of a WTMA cloud or something like that, box off the high and the low of that candle. When you drop to the lower time frames, then you can play that breakout. So when I'm on a 3 minute, if I see the trend is already established, so for example, if I see this type of breakout on NVIDIA, right, on the 3 minute chart, since I know that it can push up, my strikes, when I buy strikes, my strikes are always based on, let me get these orange lines off the chart. My strikes are 100% always. When I say all, I mean always based on the first target. You know what I'm saying? So for example, if I got into Nvidia down here at 209, my strike is going to be at 211 or lower, right? If I got into it and it had a break retest here, and the first thing that can stop my play from being successful is this big, giant, thick historical resistance. My strike is going, if I go out of the money, I'm going to be at 212 or lower, you know what I'm saying, than what the current price is. But I'm always trying to hang around the first realistic target that my stock can hit. Because once it hits the first target, now my out of money contracts are in the money. You know what I'm saying? So then I'm bankrolling. I got my contracts a little cheaper, but when I went out of the money, I'm not gonna go get 215s, right? When I'm way down here 209, because I got this level in the way that can stop me. I got this level and I got this level that can even stop it from getting to 215. Now, if you get 215 strikes, you can still make money on them, but you got to understand that they're going to be losing value really quickly if you're like 0 day, you know what I'm saying, contract. So if I'm getting like 0 day or like same week contracts, I try to stay, you know what I'm saying, within like the first target. If I'm getting like longer dated contracts, I would use the same technique. If I'm on a daily and I see that Nvidia was to see it's in the order block right here, but if I was in the daily and I see that my next target would be here or 215.70 before I hit this order block, or if it was like a level of resistance, use your historical support and resistance lines to choose your strike when you're going out of the money. I only go out of the money when the chart says, okay, you can go out of the money. Like when I say it says it, I mean I have like room to go out of the money. Like it has to be like an A+ trade setup scenario where I can see like how you look at Dale right now. I like Dale because Dale is bull flagging. We have a level 3 confirmation, which means our 200 is yellow, our 12 is blue. We close over this order block, and now we realistically can hit 254, right? If I was trying to swing long, right? We have some liquidity here at 254. And so if I was gonna go long and go like next week contracts or something like that, I could get to two max. If I was gonna go out the money, would be the 254 strike or 253, 255. I mean not 255, but 455. The 455 on Dell would be the furthest out of the money that I'll be willing to go. But I'm basing it off the fact that we're getting close to a 12 cloud crossover. We above the WTMA cloud. It's consolidating compression right here on top of a fair value gap. We already got the entry retest of the fair value gap here. But if I was going to go out of the money, I'm only going to go as far as this order block will start. You understand? Because once I get here, I can get rejected, but I also have in the money contracts.
Gotcha. I understand. Now, if you're, because I usually do like at the money when I'm day trading, right above that line, just to have a good cushion. Is that
Yep.
okay to do that?
Yeah, absolutely. So you'll pay a little bit more, but you get more protection, right? And so, but say I would go. You can go anywhere between this range or under. Of course, you can go under it deeper in the money, but I do this when I'm trying to. If I see the move and I see it historically, it has done this in this range when it breaks above it. Because look, you just look at the historical evidence, and what I mean by that is if I look at it broke this line last time, it's trying to break this line again. It skyrocketed and hit 63, right? It couldn't break. It broke it here and went to 460. It broke that level here and went to 464, right? Now it's trying to do what? Break that same. They travel down that same river again. So when I look to the left and I say, okay, they get busy in this A+ trade range. They got my attention. Once I get confirmation, I will get the anything between that 454 and below would be what I would take if I get the confirmation, especially if they start breaking out on like the 15 and they start giving me, true confirmation. Like it gets even easier and better. Like when I get down here to a lower time frame, getting a inverse arc or a level 3 here, like you seeing like you can get a 451, 460. They finna try to get busy in this range, right? Last time they broke this one here and shot straight up, hit that resistance to the penny, pull back. Now they're trying to get an inverse arc. All we need now is a close above that, and we trying to clock to that this resistance up here. And so if you look left, this is what they do up in this range. They pop up really quickly in that range. So I'll be looking for that historical price action in that range. So let's look at this.
Thank you, man.
Trade.
Appreciate you, man.
I appreciate you. Now, and look, now after we just put that in there in some screenshots, now you will have a full trade plan with your ticker. The reference price is telling you there's no execution authorized just yet. It's probably looking at some of them order blocks. And so now it's just when you read through this, it's going to tell you kind of everything that's going on with the stock until it gets down to this is your entry zone. It's saying, okay, this thing needs to pull back for you to enter between $23.15 and $23.40. Your second entry would be here. Your stop loss would be at 22.50, right? And then your take profits, it gives you your take profit levels here. If you got a pullback, so it's telling you to look for a pullback entry, don't chase it, right? And so suggested predefined distribution at take profit One is telling you to go ahead and trim 30 to 40%, take profit. Two, trim it, and then leave you a runner. You know what I'm saying? But it's telling you to trim as you're hitting your profits. It's telling you that you need 45 to 75 days to expiration. Um, if it pulls back decent enough, 30 to 60 will do, right? And so it's giving you like to schedule a lot of information about the stock. And even if this was too much, like I said, you could say, hey, give me a summary of this and make it very simple. I'm new. And if you said that, it'll take this entire trade plan that it just gave you and break it down. Plain, you can say, give this to me in plain English. It's too technical. I'm very new. It'll give you this whole trade plan broken down like very simple into a just a basic trade plan. And so once you get your CWCA certification, most of your effort literally is going to be going into you can't do this part until you get the certification because you don't know what a good trade looks like until you understand the components of the chart. So then, like some stuff I can be flipping through, and it'll like Dale, it'll immediately catch my attention. I'm like, hey, this thing, man, this in a range where I can make some money with this thing. Now look at it after hours while other stuff is dropping. It's at 443, and so it's gonna try to make the move without me. So, but I can already see that. Look at these big A plus trade ranges from 421 to 438, and it just cleared this range. But is it a coincidence? No. Every time it gets in that range, it clear that range, clear the range, clear the range. On the way back down, it dropped really hard. On the way right down right here, it dropped really hard because you're between these big gaps in support and resistance. And so it was able to do that. Uh, but I'll be doing another call like this. I know you all might have some more questions. Make sure you use that Discord link. I'll be in the Discord chatting for a little while tonight. But I appreciate I'm gonna give you your day back. And I appreciate you guys. This video will go on YouTube. For those of you that's inside of the Wolf Empire, I'm going to post the Zoom link to this video first. And so you all can go ahead and start studying it or watching it. I know you got trading tomorrow. And so you can go back over this video. And then I'll also have it available on YouTube as well. And so make sure you all subscribe to the YouTube channel if you're not. I think this is this is the channel. I just made this education video one, but it's just Sean the Wolf. What is the name of this channel? Yeah, Sean the Wolf _education is where you can keep up with all these videos, and a lot of the content is very in depth, right? Teaches you things about trading that you even sector rotation, how to actually trade this market efficiently and consistently. And so just reach out to me in the Discord if you have any more questions. I really appreciate everybody jumping on, but I appreciate you.
Hey, have a great night, man. You're the best.
Appreciate that, Coach.
Thanks, Sean.
I appreciate it.
Thank you.